And if we look at their forecast here, they're forecasting annual revenue growth of 30% or greater for 2021 through 2025. So you can expect 30% revenue growth annually over the next 4 years. What's going on, money lovers? Welcome back. Happy Veterans Day to everyone out there. If there's any veterans listening, we thank you for your service. So Palantir stock has been getting absolutely crushed, down almost 14% for the past few days. And when we look at their earnings report, it doesn't really make sense for it to be down because they reported a great earnings. Let's take a look at the numbers. So Q3 revenue grew by 36% year over year to $392 million. Their commercial revenue also grew 37% year over year. And this has been a worry for many people. Most of the growth from this company, they can only do so much with government contracts. The government contracts are obviously great for consistency, but for this business to really scale and become something, it's going to be through the commercial route. And they have proven so far that there's plenty of room for growth in the commercial arena. As we can see, 37% year over year. That's a great growth. And they've also beefed up their sales team. They've been hiring a lot more of a sales force, and that will definitely help this commercial revenue to continue to grow. So for the year here, they've had revenue growth of 44% to over $1.1 billion and adjusted free cash flow of $320 million. Palantir's technology is special. It's unique. It's applicable to so many different industries. And as we talked about in our last video on Palantir, they're even investing through Foundry for Builders in these new startup companies like Lilium, you may have heard of. They're designing these electric VTOLs that are designed to be air taxis one day. But Palantir is investing in these companies and they're using Palantir software. So Palantir is set to prosper greatly from these investments. If we go down here, you can see Palantir's growth quarter over quarter. They keep growing revenue at a nice pace here. Now, even though revenue is growing, they're losing money primarily due to they give a lot of stock-based compensation to their employees, which will help them retain and attract top talent, which moving forward, I think it will be fine. This company can easily become profitable as the revenues continue to increase. And as you can see over here, Kathy Wood of ARK Invest bought up 2.7 million shares of Palantir on Wednesday, and they own Palantir in all of their portfolios. So I think Palantir is a buy here, and I bought more shares today, bringing my average cost basis up to $21.87. And as you can see, Palantir's kind of just been stuck in this range this year. It hasn't really done much. It'll trade from the low 20s to the high 20s, but I think it will break out eventually if they can continue to grow like they said. I encourage you to check out the video series we had posted on the channel here. Going back a few weeks, we broke down the 3 different segments of Palantir's business and what exactly Palantir does. Fascinating business, started by Peter Thiel and Alex Karp. This company has a lot of potential. Now, some of the bear cases on the company. Some people say that this company is overvalued. $45 billion market cap. They're bringing in around $1 billion of revenue. And they've got a lot of shares outstanding, and you get some dilution because they do offer so much stock-based compensation. So when they dilute the share count, obviously that's going to send the price down. That's not an operational concern. That's a short-term issue that long-term, I think, as long as this company continues to execute, it will work out just fine. So while Palantir is losing money, it's primarily due to the stock-based compensation as well as them beefing up their sales staff. They're investing considerable amounts into R&D and increasing their sales staff so that they can grow more in this commercial space. But focusing on the strengths of this company, there's a lot of promise for commercial growth now that they are targeting the private sector. Their technology just seems to be applicable to every industry. It seems like almost every company can benefit from using their software. So they're doing something that's unique, and they always have a reliant customer in the government. They get a lot of their revenue from government contracts. They've got a very strong balance sheet, over $2 billion of cash on hand versus their total liabilities of around $1 billion. So a healthy balance sheet. So while the primary concerns in the short term, people can argue the company is overvalued, diluting the share count. I think long term, these aren't issues when the company continues to grow. And if we look at their forecast here, they're forecasting annual revenue growth of 30% or greater for 2021 through 2025. So 30% revenue growth. So you can expect 30% revenue growth annually over the next 4 years. If they're able to do that, this company is going to do very well. So if you enjoyed the video, please don't forget to like, subscribe, drop me a comment below if you have any questions. This is Vinny from the Investment Club, and I'll see you next time.